Welcome everybody. My name is Dan Burke, and I'm the VP of Sales for Qredo. And today we have a very exciting panel with two of the top capital allocators in the space, Paul from Pantera Capital and Min from Ethereal Ventures. But first, I'd just like to give a huge shout out and thanks to the organizers SCB 10X and Bloomberg for having us, hosting such a well-organized and well-attended event. So our topic today is navigating crypto investing in the bear market, landscape, opportunities, and challenges. And I thought a really interesting way to kick this off would be for each of you guys to introduce your firm and the thesis behind your investments. And then perhaps, because we are in a bear market, maybe talk about a recent investment that you did and why you're excited about it today. So whoever wants to start, we can kick this off. Maybe Min, we can start with you.
Sure. As a quick introduction, I'm the managing partner of Ethereal Ventures, which is a global investment firm focused on pre-seed and seed opportunities in the crypto space. The firm was set up by the former investment team of Consensus, and we take a global view. We also primarily invest in technical founders, and we also provide day one capital to help founders get from 0 to 1. In terms of a recent investment that we did, us together with Paul, who we've co-invested in the category with, we're very passionate about staking. We think it's a huge unlock for the ecosystem, and it represents an emergence of, for the first time, what is the closest to a risk-free rate in crypto. And, in addition to creating a lot of financial products from that, I think you can also bootstrap economic security from staking protocols. So there's many possibilities of creating new applications from staking. One of the recent investments that we haven't announced yet, we are investing in a large institutional liquid staking provider who will, hopefully help to unlock that category too. As we've seen a lot of interest on the retail side, it's still been quite nascent on the institutional side, but we do think that, sort of liquid staking is a perfect institutional product.
Awesome. It's good to hear you guys have done a deal together.
Many, and hopefully more to come.
Exactly. Totally. So I can go next. I mean, Pantera Capital has been one of the earliest investors in cryptocurrencies and blockchain. We've been doing it since 2013. So we just hit our sort of 10-year anniversary in focusing just on this space. The firm was founded by Dan Moorhead, who used to be CFO, head of global macro trading at Tiger Management. So he's kind of got the institutional, traditional finance, public equities, hedge fund background. And so he saw disruption fairly early on in 2011. It took a couple of years, and, Pantera refocused on cryptocurrencies and blockchain. And I think for us, we have, I think now probably close to 4 billion of assets under management. We invest through both a venture fund and a hedge fund structure. So we do both equities and tokens, focusing on the early stage. But I guess the differentiator would be we probably go up to maybe Series B and maybe up to Series C. So with our latest $1.3 billion venture fund, we have a little bit of flexibility in being either the earliest capital or just finding companies with product market fit and helping them sort of scale. I've been with the firm for the last 9 years. So, before that, most of my career has been around venture capital. Within the last 9 years, just kind of sourced and executed over 200 investments, a lot of it around sort of on-ramps and infrastructure. In terms of some recent investments, or at least one that I'll point to, number one, of course, I'm super excited about Obol and staking. I led our investment in Staked, which at the time was one of the leading staking providers. We got acquired by Kraken. So again, starting fairly early on, super excited about staking. I guess more recently, I think I put out a blog post recently on Veradittakit, but we invest into a company called M0. It's not, I'd say, at the seed stage. It's kind of more like Series A, full Series A level, but we really love the founder and the team behind it. The team comes from Maker. One guy that was kind of leading governance on Maker, the other person, Greg DePrince, that was kind of doing a lot of the business development and partnerships. And basically what they're trying to do is trying to provide a stable coin similar to Maker, but really giving folks, institutional investors especially, but basically access to real world assets. And so, obviously one of the most interesting real world assets right now is around treasury yields. And so basically trying to create a compliant way to connect both investors, to yield opportunities. And I think the interesting part of it is that, like, while there are some other options out there to give folks access to treasury yields, the fact that these guys have come up with a interesting way of, creating these different yield boxes, having the right sort of governance structure around it, and then of course being able to give the yield or benefits back to the users, I think is pretty interesting. So we did that with like a few other strong investors, and we're really excited about their vision and sort of the execution path so far.
Yeah, I definitely think like the treasury yield is a big theme. And I think the interesting part of that market is that could be a huge force to be reckoned with on the collateral side. Like if you have collateral that gives you yield and you can put that into different protocols, I think it gets really interesting, and the assets could swell pretty fast during that. Okay, cool. So before we get to the current state of the market, I think perhaps maybe we can pause with a little bit of reflection. So you guys have both been in the market for a while, especially on the VC side. So how is the investment landscape today compared to all of these other previous cycles we had? We had the bull market in 2017, bear market in 2018, and then like kind of complete euphoria 2021. So how do you guys kind of judge the market today versus those three periods?
Yeah, I can take a stab at that in terms of, how does this sort of, bear market, if you will, differ from, say, some of the prior ones, like, 2018 and those before. I think there's definitely a lot more at stake. Like crypto now feels like it's established as its own category. It's not going away. There's no existential threat. So from that perspective, there's, in many ways, it's, just common cyclicality of any market that you have to accept. And, we just kind of have to soldier on. But at the same time, there's a huge macro overhang, which, I think certainly makes the shape of this, bear market slightly different from the rest, where, it's not just Web3 or crypto, it's also the S&P, it's also like Web2 venture. I think it's also a lot of liquid funds. Any sort of risk asset right now is definitely challenged. I think it's not an easy time to be a capital allocator, that's for sure. There's a lot of things you just don't know, and it's tough to sort of put your finger on it. It's tough to put a number on it. I will say that there are a lot of solid tailwinds for crypto right now with, a lot of inflation concerns. Like, you see a lot of people turning to gold, turning to Bitcoin, turning to crypto as a more solid store of value. And that's an interesting dynamic, particularly with rates where they are. People are still saying, like, I'll give that up. I want security over my own assets. And I think that also, points to a deeper sort of concern around, say, big tech and governance that's prevailing in countries around the world. Issues such as, privacy, data, storage. I think people are really gravitating towards more sovereign options and more secure options. And in many ways, crypto provides a very interesting and useful alternative for people who are unbanked or people who don't have alternatives. So, certainly I think there, from a market's perspective, things feel a little bit gloomy right now, but from building and tooling and, the sort of potential of crypto remains extremely strong.
Yeah, I agree with Min. I mean, I think the differences between the past and the present, one of them is around the macro environment and how that's kind of feeding into sort of sentiment and, sort of capital allocators, and of course the fraud and some of the blowups that have happened recently. But I would say that and I think some of the other things that are similar in sort of across bear markets would be the fact that, and I think this kind of starts off with some of the capital allocators, but I also think that folks that are investing into the space has changed quite a bit from the bull market, but is similar across bear markets where, obviously there's a ton of growth funds that invested into crypto during the bull market, kind of going a little bit more earlier than they normally would, just because, you know, they might see that it's a little bit riskier. Let's go a little bit early. Let's deploy a little bit less capital. And those growth funds are sort of out of the market. I'm seeing a lot of traditional VC funds, whether like they've been spooked just from what's going on, or whether they've been burned from being investors in, you know, some of these blowups. A lot of them are backing away from investing. And for us, that's great. I mean, I think for us, like, we have certain theses that we are excited about during this bear market. And if there's less competition out there, then, you know, that's kind of where we make the most money in terms of being able to get into these deals, get more ownership, have more governance, etc. And I think the other thing that is similar across the last bear market to this bear market is the valuations are dropping. So again, for us, like, I guess I'll speak a little bit more about our fund, is that like we have a larger fund. So while seeds are still very, very attractive compared to the bull market, Series A's and Series B's are very attractive for us, where we can put a lot of capital to work. So if you're able to get a Series A deal done right now at the same valuation that a C deal was done 6 months ago, and you can get a lot more ownership, that's very, very appealing for us. So we have the opportunity to do a lot more diligence, make a lot more conviction bets, and really, you know, hopefully find, you know, the winners, which I think, you know, a lot of them do emerge from the bear market. I would say some of the differences between the last bear market to this bear market is, I think there's a lot more opportunities for entrepreneurs to kind of come into this space. During the last bear market, it was really about like, how do we solve scalability? And so we saw a lot more layer ones kind of come to market. We saw a lot more of them launching, etc. And so now I think where we're seeing is more opportunities around dev tooling, more opportunities around bringing institutions into the space, and actually more opportunities around the consumer side of things, whether it's gaming, whether it's decentralized social, etc. So that means that the opportunities for more entrepreneurs to come to this space has greatly increased. And I think the last thing that I'll mention is that, like, we're seeing, compared to even the last bear market, like a lot more quality teams coming to this space. And that's kind of our North Star, like looking at like developer adoption, looking at the quality of teams, the type of talent, etc. And so as long as we're seeing amazing teams coming in and building into this space, then it gives us hope that we're going to see the right companies come out of it.
Yeah, nice. So you touched a little bit on valuations, and Min said actually it's quite challenging to be a capital allocator at the moment. So a couple of other things maybe would be interesting to touch on is, how are you guys finding deal flows at the moment? I know, Paul, you mentioned you're still seeing quality teams. I think something very, very recent, which is interesting to discuss, is, you know, Paradigm and A16Z have kind of pivoted somewhat into AI, and there's lots of speculation on Twitter and stuff that they're just having a hard time deploying the capital. Is that because we're in a bear market? Is that because there's less quality teams? Do they just have too much capital? So what are you guys seeing on like the deal flow side, valuations? Maybe touch a little bit on LP discussions. And then if you have a viewpoint on the challenges that like Paradigm and A16Z might be facing as well.
Yeah, I think in terms of, you know, we still see very strong deal flow. And as Paul mentioned, one of the sort of biggest metrics that we try to, you know, follow is how many sort of strong founders are coming to a space, the strong developers that are, you know, committed to building in the space. And that's certainly a trend that I think has surprised us. Like, you know, it's hard not to be excited about AI. I think, you know, Satya Nadella, like in his keynote, said that it really brings us from like, you know, running our brains on bicycles to like steam engines. So like, how can people not be excited? Of course we are. But, you know, at the same time, I think to the extent like founders still remain committed to building, you know, useful applications in crypto, it's a great sign for the industry. Like, you know, despite like what, you know, any sort of general interest in AI, which is natural. And I think some people will certainly say, hey, looks really interesting there. I'm going to spend more time there, and, you know, respect to them. We at Ethereal Ventures remain fully, you know, committed to crypto. We think there's you know, a growing investable market that will only grow over time. I do think that, as Paul mentioned, valuations have come down. And, there is significant capital still in the space ready to deploy. However, for a lot of founders, there remains to be a valuation gap. So deals are taking a bit longer to close because, founders have not really adjusted. Like they're still thinking about Q1, Q2 of 2022, where they see those numbers and they think it's normal, where like, oh, I should be raising like, 5 to 10 million seed. That's completely normal. Whereas I think now it's sort of adjusted more to a $2 to $3 million seed, where investors at the end of that seed round, like we are really hoping that teams get to product-driven milestones, not just in terms of working products, but also some level of product traction. So the bar is certainly higher in terms of like, time to market and monetization. And that is like certainly like a different like sort of shift that we've seen in the market.
Yeah, so I agree with Min. I mean, I think that there's a lot of reason to be interested in AI right now. And in terms of maybe outward facing marketing, I think there's always a pull, especially in a bear market, to basically show outsiders and maybe even LPs that like, hey, we're taking a look at like the latest stuff, and we're open to potentially giving ourselves a little bit of a broader mandate. But I do think if you talk to folks there, and I have obviously great relationships there, is like it's not giving up on crypto. It's really just like, hey, like we're continuing to sort of look at everything that is disruptive, and we'll be sort of open-minded. I think the thing about AI is that like it's not its own category. It spans across like crypto and a bunch of other things, like whether it's like infrastructure, whether it's customer service. I mean, and so if you think about like investing into things that support the crypto ecosystem, I think you have to kind of look at things that are related to AI. And so I think for them, it's natural to like explore what that intersection could sort of be. In terms of capital allocation, at least from the LP side, it's tougher right now to raise for sure in crypto. I think especially if you are a larger fund, then you run across like, well, like what does the deal flow look like? What is the, if folks aren't doing growth stage deals right now, then where are you going to deploy capital? And the answer would be, well, there's a lot of opportunities in the liquid side of things. So that's where you can actually scale. We put in capital, be opportunistic on the growth side. And then of course, like, as the market picks up, then, things will be a bit easier, in terms of just like the number of deals and whatnot. And I do think that like smaller funds like Ethereal probably have a good angle at fundraising right now, because if it is a tougher environment to fundraise, then folks are probably, those that are bullish on crypto will probably deploy maybe smaller check sizes than they normally would think. And so therefore, like some of the smaller funds have a good opportunity right now to kind of get off the ground. But I would say that there are still really big pools of capital that are interested in deploying crypto. And I think the gate to that is really just reputational risk from institutions. So I think once we kind of let some of these blowups settle down, there is a sort of a desire to really start putting like fairly large pools of capital to work within crypto, and especially from some of the newer geographies like the Middle East and Hong Kong that are really sort of being very pro crypto there. But I think it's going to take a little bit of time. On the investing side of things, I think there's a lot of opportunity, and I think it really depends on what sort of size fund and what sort of strategy you have. I would say if you are a smaller fund where you can take a more diverse set of bets out there, and maybe, for instance, like conflicts aren't as big of a factor, then there's a lot of great teams building at the seed stage in a whole bunch of different areas. But if you are a fund like Pantera, where you're really trying to bet on the winner and, pick certain categories, then I think right now the challenge is that like there are less categories to feel as confident in. For instance, like we're still waiting and seeing on what happens with crypto gaming. So I think a lot of folks are stepping away from content and really focusing on infrastructure there. NFTs have been a very, very, volatile space. And so again, folks are stepping away from, I guess, content and collections and focusing a bit more on infrastructure. But then again, there's certain areas right now that people feel a bit more confident in terms of betting on a longer term sort of thesis or something that has a business model that is a little bit more sort of tangible. And some of those would be, again, a lot of developer tools, cross-chain interoperability, scalability. Exchanges are still interesting. On-ramps are still interesting, and possibly like some infrastructure around like security, KYC, RegTech, like things like that. So it's really kind of focusing a little more on the ecosystem services, on-ramps, and also just like dev tooling.
Awesome. So yeah, some good insights there. I think a couple of interesting threads potentially to pull on there. Perhaps you guys can talk about your focused investment areas. You've mentioned dev tooling a couple of times. Is the thesis behind that if the crypto developers make these tools easier to use, it brings extra developers in from maybe the Web2 space or traditional tech, you would call it, into the space? What are some investments you like there? Both of you guys have mentioned Obol Network. This is kind of this Ethereum middleware sector. Both Pantera and Ethereal have been active investors in that space. Can you elaborate some more on your thesis in this space and any other thesis you'd like to share?
Definitely. So, completely agree with what Paul said, by the way. I think, with a lot of crypto, like one of the challenges that we might have is downstream investment to get, capital to help our teams grow, further down the line. But at the same time, it's very difficult for, later stage investors to underwrite if addressable market, like, sizing hasn't really stabilized, right? You need sort of pathway to monetization. So a lot of times, we're asking founders a question a lot. I think also there's, it's been very challenging for a lot of founders where maybe capital efficiency has not been the strongest in the last cycle. Like teams sort of scaled up very quickly to respond to very rapidly fluctuating market demand. And when that sort of went away, like, in the NFT space, for example, like, they had to sort of adjust, like, their team sizes and their operations. So, in terms of our focus, we look at sort of pre-seed, seed, and Series A, like sort of on the earlier stages, helping like founders get to from 0 to 1. And we're really focusing on founders who we believe can execute now. Like, so I think previously, I think in bull markets, like investors tend to be very experimental. There are lots of possibilities because you see a lot of excitement. And now I think like, really we're working with founders to get to product market fit as quickly as possible, manage burn, extend runway. So the requirements for success are quite different in this market. And I think, having strong operators, strong product people in crypto, that's what you really need to really get like, the addressable market and adoption numbers up. For us, we're traditionally an infrastructure focused fund. We continue to be very excited about the infrastructure layer. But, having invested in it for the last 2 years, I have to say I'm very excited to see how people use all the infrastructure that will be built. So our attention to in many ways is now shifting towards the application layer. There's a lot of stuff that wasn't, as Paul alluded to, that can be built that wasn't possible before. Now that we have L2s and rollups, right? We just weren't getting, to the TPS that we needed to build applications beyond trading. So you have sort of like trading, like, needs a certain amount of scalability. Beyond that, you have payments that require like multitudes of that. Then social, again, like orders of magnitude of that. And then you get to like sort of gaming, like, type kind of TPS, where, you are actually putting a lot of stuff on chain. So we started looking at, what that maturity cycle looks like, and what are like applications further down the line that we think are, can be built today that people couldn't build before. I think we also continue to be excited about, zero knowledge cryptography, another space where, I think the VC funding has fueled a lot of R&D over the last few years, and it's cool to actually see a lot of it come into production. We led the Aztec protocol seed in 2018, and a lot of the seminal sort of ZK related projects were funded at that time. And it's been a long journey for them, and they've actually pioneered a lot of ZK research that can be used for ML and other like hardware related spaces, like through their work. So we're quite like keen to see, sort of proof verify like type of projects and simple applications where developers can build ZK related applications without actually having to write circuits, to see what possibilities that they can come up with the technology.
Yeah, no, I agree. I mean, at the end of the day, like we are trying to bet on, especially during the bear market, I mean, things can change quite rapidly in terms of what works and what doesn't work. There's a lot of experimentation. If you bet on the right teams that can listen to feedback, that can really sort of be methodical in terms of like strategy and really be open to pivoting and finding the right sort of product market fit and business model, then I think that's the biggest thing right now. I think for us, like we continue to stay focused on infrastructure, even though, again, like during the bull market, we felt like there were some new applications that could make sense and that could ride through the bear market. And so whether it was like a few investments in decentralized social to like gaming, actually content gaming studios, to even like other sort of decentralized marketplaces, brain trust example, things like that, that like we think like makes a lot of sense. It's going to be a long-term play, but if you can disrupt the intermediaries, then it's quite, it's quite compelling. And so I think for us, like where we continue to sort of be bullish on from sort of the last bear market to this bear market is DeFi. And what does that sort of look like going forward? I mean, I think there's still a lot of like protocols and primitives, whether it's around like derivatives or, I think other sort of things in that sort of realm. But I think the other thing that we get excited about DeFi is like, well, if we want more and more folks to come into DeFi, then how do we sort of connect institutions to DeFi? Does that look like options, structured products, like real world assets, like things like that? And so we continue to sort of figure out like how DeFi can get much bigger outside of the, let's make sure that everyone can get into DeFi through Stripe and sort of fiat on-ramps and like KYC and all that kind of stuff. I think the other thing is around the middleware part and sort of like the lower level infrastructure. So Obol is a great example of that. We also are investors in Flashbots. So we co-led the Series A. And so things like that make a lot of sense for us. And then, of course, like on the developer infrastructure. So we led the Series A. I'm on the board of Alchemy. I think there's a lot of things, whether it's like, we led the seed round of Arbitrum, we led the seed round of Starkware. So I think all of these different new technologies, scalability, zero knowledge proofs, these are all things that really excite us. And so I think the other thing to sort of mention is that like we are more likely to invest into a company that we think we can add a lot of value to. And so because we have a long history of investing and kind of building up the relationships, especially on the developer side, but also around like the enterprise side and things like that, we want to be able to, things that are providing a platform for developers or needing sort of ecosystem partners within the developer side to sort of scale. I think that's really where Pantera flexes the most because of, again, all the relationships that we built in the past and also kind of building up a team around sort of market development, securities regulations, like tokenomics, things like that. Like, so I think that's kind of where we flex, so we can really find the most ways to kind of add value to companies. We're more likely to go in.
Yeah, good to hear. On the LP side, it's not often an interesting topic for people, but I'm curious, like, are the LPs still interested? Like, do they still call you guys? I imagine in 2021 it was crazy with the amount of times they called you and asked for updates, and then 2022 we had a lot of the blow-ups and stuff. Like, what's their mental state of mind right now in the market, and like, are they still interested to receive your updates and things like that?
Yeah, I think there, it really depends what kind of LP you're referring to.
Yep,
Like,
exactly.
you take many sort of different forms. You have individuals, you have family offices, you have fund of funds, you have sort of more like, the global institutions. And I think certainly you have, like, as Paul alluded to with like the Web2 VCs, you do have people who are like, hey, this is interesting, like, a little bit more like sightseeing. They're more of the tourist type of LP. And there are others who have, like, done fundamental work, like, over the last 2 years and decided, like, this is something that we actually want to allocate to long term. We think there is a lot of promise long term. It will ebb and flow like a lot of emergent technologies, but we are committed to that. And so we definitely see we have some LPs who have taken used the time and over the last 2 years and the relationships that they've built with managers who really get smart in this space, make direct investments, and those LPs are certainly not going away. I think they also recognize that this is probably one of the best times to invest if you place your bets correctly and get the diversification that you need for the portfolio. And they've sort of seen it happen before in prior cycles in different verticals as well. But I think much of it is timing. Like, when I've said that it's tough to be a capital allocator, it's also tough to be an LP, like, where risk assets in general, not just crypto funds, but VC funds, like hedge funds, like, private equity funds, like there's a huge rebalancing of portfolios that's happening right now still. I think it's like, sort of started over like, Q3 in 2022 when rates like, sort of going up really quickly, and it still continues. So everyone has their own fiduciary duties to whoever gives them capital. But we're very encouraged by the LP conversations that we're having. Also very grateful to our LPs who remain to be very supportive and continue to be interested in what we're seeing in the market, like what trends like we're excited about, where prices are going. So certainly the engagement levels haven't really like dropped off from those LPs. So I do imagine that some of the more like touristic kind of capital has like certainly like probably moved on to other pastures now.
Yeah, I agree with Min on that. I mean, it really depends on your LP base. The institutional ones tend to be a little bit more hands-off versus the non-institutional ones tend to be like typically a bit more active. I would say outside of that like higher level generalization, from what I've seen in the past, when there's a bull market and everything looks great, valuations look great, performance looks great, no one bothers you. When numbers start going down, the markets start going down, there's things that are coming up from a like company specific perspective, things aren't going well in the headlines. That's when, especially for like non-institutional LPs, there's just a lot more question marks, right? It's like, hey, like, especially some that are very, very active in this space, is like, oh, okay, like, and of course, if you provide transparency on like everything that you're doing, it's like, well, why didn't you guys do that? Why didn't you guys do this? And like, so there in general, there becomes a lot more scrutiny in a bear market, especially for those that are very, very active. I think for us, like, we try to be very transparent, and hopefully our LPs like appreciate that. And of course, that just means that like, as there's things that like need to provide more context, we'll provide more context, but at least they know that's kind of what they're getting from us, and is kind of like aligned with like the ethos of the industry, is that like we want to be really great actors. We want to basically share everything that we're kind of going through along the way. And hopefully that means that like along the way, whether it's us, whether it's our portfolio companies, the more information that some of our LPs have, the more that they can actually provide value in terms of being able to either provide portfolio help in certain ways, or maybe even like some like learnings from like how they've been able to sort of manage, assets and things like that.
Yeah, that makes sense. Paul, you touched on this very briefly earlier. I'm wondering if we can expand on it, but you threw in potentially deploying capital into the secondary liquid market. And something that's been coming up in a lot of conversation I've been having in the market is kind of the potentially a disconnect between the liquid secondary market, token market, and kind of the initial pre-token generation event valuations. Do you guys have any kind of insight into or justifications of why you would invest in one over the other, or why there might be a disconnect, or any other insights into kind of the relationship between those two?
Yeah, I mean, I think from my experience is the liquid markets are just a bit more current in terms of just reflecting like kind of what's going on out there. The private markets just take a little bit more time to be reflective. I actually don't think that like we're fully there yet in terms of like valuation reset, especially with like what's going on in the macro markets. I think, and sort of like we'll sort of see, I mean, because of what's going on in the macro markets, I don't necessarily see the liquid markets like picking up. Like there's not like a huge like trigger point for the liquid markets to really sort of pick up yet. I mean, we'll see what happens. I mean, maybe like some of the things around like the macro or fundamentals kind of like drive things, but because of that and the fact that like we've been in a certain market for a period of time, I do think like as companies need to resurface for raising capital to sort of sustain themselves, we're going to start seeing even better valuations as we head into the latter part of this year. So again, there's just a bit of lag in terms of just, as Min mentioned, the realization that we can't go after the same valuations. So it just takes a period of time to sort of like realize that, in addition to sort of like, now we got to fundraise. And so we just have to be a lot more realistic, and the leverage is a little bit off our side.
Totally. I think where we see opportunities in sort of like the public markets, and there certainly are some like where we think that there's very strong tailwinds, but I would say it's also a very mercenary market in the public markets at the moment. We're still seeing a lot of volatility. We're seeing some very sophisticated sort of traders like sort of move markets quite significantly. It's it's quite volatile in the sense like, so because it's so driven by inflows and outflows, and for investors, especially for Paul and I, where you have the ability to do both, while like you see value there, like taking mark to market risk sometimes is very painful, and like like Paul mentioned, you have to explain to LPs, right? Why is this one public position like X% down? Like why are you still holding on to it?
Yeah.
Why have you sold off? So sometimes like those conversations like aren't pleasant, and as a manager, obviously our jobs are to maintain conviction in the investments that we hold. But at the same time, I think when we talk about valuations and public markets, and that's our bread and butter, being at the sort of pre-seed and seed, though we do have the ability to do tokens, and we have a small liquid book too. It's not so much that we want to take advantage of like lower valuations. It's simply we just can't underwrite higher because of the comps that are imputed by the public market. So if we're say doing something at 100 million, when a comp is trading at 100 million, like it doesn't really make sense from like an investment perspective, like if you're trying to like figure out what a positive outcome looks like. And because a lot of these positions are liquid, so you can just keep them at cost on your book, like they're not reflected directly as a result. So like the teams have to raise again, and the new money have to make that assessment, right? What are public market comps trading at? How do I underwrite this? So as Paul said, I agree, there's there's going to be a lag in the like private markets. I will say that some founders are smart enough to figure it out, like, where they're like, hey, I don't want this to be a very long song and dance. I just want to build product. I know valuations are down. I know I'm very nascent still. We just want to find the right partners who can support us and get to product market fit as quickly as possible. So we do see like some founders just also recognize that a lot of the like, giants of like the last cycle they were built on like, they weren't raising at like 50 million valuations. Some of them were raising at sub 10 million valuations. I remember a time where we were working with our portfolio companies to try to raise like Series A's at like, 15 million valuations, right? That wasn't so long ago. So ultimately, it doesn't stop people from being successful, and I think we still see value there where we can have like very rational conversations with founders and they also understand what the task at hand is.
Yeah. I would add one more thing that like I realized recently, and what we're trying to sort of get better at is the liquid markets have gotten a lot more sophisticated. So again, there's a lot more data out there, on-chain data. There's a lot of things, a lot more tooling out there. So I think for us, like what we realize is that like we've been pretty good at investing into early stage private investments, but on the liquid side of things, like we actually are segregating. Obviously, there's some overlap, but we're segregating the teams a little bit because we know that like liquid, in terms of just like it being so like fast moving and like LPs kind of think of liquids a certain way, is we are sort of like having a separate team that can sort of like have that mentality and have the right sort of like infrastructure to basically execute well on that side of things.
Cool, interesting. Yeah, I think the liquid is a super interesting market. It is getting sophisticated, and I was just wondering if there is kind of the same filters you guys use when you're evaluating teams and valuations, if that model can be applied. It kind of sounds like it can, and there is some opportunities in the liquid secondary market. Changing gears a little bit, how about talking about your existing portfolio, like your existing investments? This year and last year was a pretty challenging market environment. What do you guys find are the most common challenges, and maybe opportunities as well that your portfolio companies are facing? And what advice are you guys currently giving them?
Yeah, I think, keeping it brief on this front, but we're mostly seeing like, a lot of challenges along sort of managing burn, extending runway, getting product market fit. I think for some of like, our portfolio companies that are sort of scaling in this market, we call it the seed round of Eigenlayer, and they have a very ambitious roadmap and are, a lot of market demand. So they're, rushing to try and get the product out, making sure that they have strong talent to fill their ranks, especially like, people who have shipped and deployed products, or like, engineering managers who have manage big teams across like, different products. Like these are still day-to-day challenges where we have to continue attracting smart people to the space. Those are the main sort of challenges. But in terms of opportunity, I mean, I moved to Singapore in like, December, where I think Dan and some of the SCP 10X team are. We're very excited about Asia in terms of like, say, adoption, developer adoption, user adoption. It's really cool to be living in a place where people are very excited about crypto. So I think we're encouraging a lot of our portfolio companies who take a very global view and just look outside their immediate geography to a lot of like, markets that have a lot more potential, where there's still a lot of excitement about crypto, like Asia.
Good to hear.
Yeah. I think Min touched a lot of what we're thinking about in terms of our early stage companies. I guess maybe since we like have, we've done it for a long time, so we have companies that are in the growth stage, and we also are investing into like the mid stage. Some of their challenges include, again, hiring for sure, but I'd say like a lot of them took advantage of the bull market and raised maybe a bit more capital, a bit higher valuation than they potentially could have been raising in any other sort of market. And so that means that they have a war chest to be able to sort of sustain this bear market and beyond. Then it becomes, well, we have this capital and we want to be efficient with it. How do we prioritize all the different things because they were able to raise this capital because they have found some product market fit. But then it's like, okay, as we start thinking about scaling, there's 10 different things that we can do. How should we sort of prioritize that? And I think that becomes like a big sort of like value add for investors that are basically like able to take a step back and kind of see the overall sort of like picture of like what does the landscape look like, what the competitors are doing and everything like that, to be able to guide them in terms of like, hey, you should do this, this, and this first. Everything else is like not a priority. And then of course, once you accomplish that, like go into different things. So I think that's been a bit of a challenge for some of these growth stage companies. And then I'd say a couple of other things would be regulations. And I think that's why like there's an opportunity here to really think more globally and provide more credibility and clarity, whether it's Hong Kong, whether it's Dubai, et cetera. So a lot of our companies are in the US, so they think about like what's going on domestically. And then of course we can kind of fill them on where there's a great opportunity internationally right now. And I think the other last thing is that like treasury management is that do you have that much capital? Do you hold it in cash? Do you think about diversifying into crypto, treasury? Like, how do you make sure that like you can put as much onus on execution of your product versus like screwing up on like managing like your balance sheet? So I think that's been one of the most common questions asked recently.
Well, guys, this was awesome. A lot of good insights, a lot to unpack. Definitely a lot to follow up on as well. How can people reach you, read your thoughts, see what you guys are up to? Paul, I'm a subscriber to your newsletter. I love it. Recommend everyone have a look into it. But are you guys on Twitter, email? What do you recommend people who want to get in touch with you and just read your thoughts?
Yeah, I'm on Twitter at _MINTEO. And, our website is a little bit sparse, but there is an email there at ethereal.xyz.
Yeah. And for me, like, I mean, I have a blog. You probably won't remember Veradittakit, but you could just go to my Twitter, which is just my last name, Veradittakit, and you can find like links to our website, blog, etc.
Awesome. Well, good to speak to you guys, and thanks for joining.